Good morning and welcome everyone to the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. First, let's explain what will happen in the webinar and then we can hit the road. So the first part will be more of an introduction to the company, what services we have in this facility that can assist you along the way. The second part will be more practical. It will be the majority of the webinar. And lastly, as the so-called third part, we'll have analysis, just on a nutshell if we'll have any spare time. I see people raising their hands. There is just no need for that. This is a live webinar. You can use the question section to ask whatever you want, regardless the topic that I'm teaching. And I promise you I see all the questions and I will address it accordingly. Now, any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or suggestion. Furthermore, we understand that not everybody understands everything on the first time, and sometimes we need a recap. So for that, you can get a recording of this video on our YouTube channel. Okay, not only this webinar is recorded, but all the webinars are recorded and can be found on our YouTube channel for free to watch. And I'm going to show you here on this interface some place for you to get even additional education. Okay, the interface that we're going to use today to have the webinar upon is the web trader. So to access this interface, all you have to do is just to log in with your email and password to avatrade.com and then click on web trader or web trading, and you're supposed to see that. If you can't access this interface, you can contact the customer service right here and they will assist you on that. There is a question here. Navindra. Okay, hello, sir. Are the revenues from the Forex trades taxable in the home country? Well, you got to ask your tax consultant for that. I guess the tax changes in different circumstances, so you have to, you can export the, okay, we'll get to that, Let's first have the introduction part, and then I promise I'll go through the questions, but I see that, okay. So to begin with, as many of you know, AvaTrade exists since 2006. We have 9 licenses worldwide in many continents in the world. The customer service, in case you got a query or a question, can be found easily here at the bottom left. You can chat with us live or use the WhatsApp function, whatever you prefer. And if you don't use this interface, naturally, you're not going to be able to see the live chat. So you can just contact us through the mail, through cs@avatrade.com. That's for customer service. And for trading, we can assign a senior account manager along your journey to give you support and assistance with trading. The senior account manager doesn't cost anything as an addition. It depends on the eligibility of the account. And you can get a senior account manager assigned either automatically, that they will contact you on the email or on the phone, or you can ask for assignment through customer service. All right, now, as I said, we're going to carry on with this interface, but I would like to also mention the other platforms that we have just for us to know. So we have MetaTrader 4. We're not going to explain about those platforms, though. It's self-explanatory. I'm just going to go ahead and say that MT5 is supposed to be a newer version of MT4. And if you're using generous diversification, I think MT5 might be more handy, but yeah, it's a matter of flavor. Okay, so we have MT4 and MT5. We also have the web trader, which I'm going to mention at the end, and we have Ava Social. Let's put that at the end as well. We have first Ava Options and then Ava Social. The reason that I syndicate the last two is because I would like to say a few things about them. And also, we're going to carry on with the web traders, so obviously I needed to be separated. And you guys should know that whatever I'm going to show you on this interface, naturally, you can't find in MT4 and MT5. Okay, that's the web trader. We also have it in the app. It's called the trading app, but it's important to know that it can only be found here, the things I'm going to show you. Now, a few words about Ava Social. The reason is this is webinars beginners, not only webinar materials, but it's directed to beginners. And I would like to say that Ava Social is especially helpful for beginners from a simple reason. There are two things you can do with Ava Social, much more than two things, but two main functions. It allows you to either follow or copy a client, a trader. The way that it works is very, very simple. You have two buttons similarly to what we see here, just obviously a little different on the app. And following someone, following a trader means that I'm going to get notifications with the positions that the trader that I'm following is taking. Let me quickly just to understand how it works. Okay, so there is, like I said, there are two functions. There is to follow or to copy. There is a difference, and I would like to explain. Follow means that I'm going to get, like I said, messages with the positions, but the positions will not be executed automatically. So that means that I can take the message that I received, can go to the platform, and I can do it accordingly. Okay, that's to follow. Copy, on the other end, actually launches the position automatically. Okay, so if I'm following a trader, I'm going to get messages and it's up to me to do it or not. Copy means that I'm going to do exactly what the trader that I'm copying will do the same. But the huge benefit using Ava Social is that I can also modify the difference in lot size. Meaning that if right now I'm uncertain about a strategy and I'm just testing out and I want to feel if it's good for me or not, so what I can do is I can customize the lot size and then bring it to a much lower number. And that's also very handy when I'm copying somebody with a much bigger amount than I have. So for instance, if I'm with 10,000 and I'm copying somebody with 250,000, of course, there will be a difference between the positions that I'm naturally going to take to the trader that has, well, 25 times more than my balance. Okay, I hope that it makes sense. But like I said, you can also customize the lot size, and then so it would make more sense between the balance difference. Okay, so that's Ava Social. Do we have any questions about that, guys? Any questions about anything that I said so far? All right, so we have a question from Natasha. Is it free? Is it free? The app, yeah, you can download it for free, Ava Social, and enjoy that. But to copy somebody, I believe there is a small markup on that. But I can't be exact because you have to download the app and see individually what it will be. Okay, but I'm not sure it will be for free. This is why you should download and see it in your own eyes. Okay, naturally, I don't think so. All right, so, but the app is, so you can download it anyway and check what I said. All right, so we have those two main functions. Let's carry on. Let's get rid of that for now. We're going to carry on with the web trader, and as I've explained just a minute ago, everything that I'm going to show you now is things that you can find on the website and not on MT4 and MT5. Okay, and this is obviously the desktop version, and as I wrote down, if you're using a phone, you need the trading app to see that. Okay, so we're going to start from what we have here at the left. We're going to go down from here. This is where I can find my personal information. Underneath, I have the trades. This is where we are at right now. A quick tip, if you are anywhere else on the website and you would like to get to here, you can just click on the icon here at the top, and it's going to throw you back to the default interface. If I go down, I have the positions. Then again, like I said, if I'm using Ava Social and I would like to monitor the account. So in here, I'm going to find my positions. Since I don't have any positions now, there's nothing in here. Orders, we're going to speak about pending orders. This is where you can find it. History is self-explanatory. Signals, let's go through that. I think it also can be very helpful for beginners to know that section. This is one way to access the signals. There is another way. Let me just quickly show you that. So I can fold it down. You see there are two tiny arrows here. We can click and fold it down. And then I have some instruments with blue lightning next to it. Now the blue lightning here, if I click it, it's going to open me the signal. Okay, and I can expand it a little higher. And then I can see that we have support and resistance here. Support is the lower edge line, the resistance is the upper edge line. And there are a few levels in here at the bottom and at the top. And I have two scenarios. So basically what we're looking at here is Aussie yen. And if I believe that Aussie is going to get stronger, and I would like to get to go with the buy. So for instance, I have here the buy scenario and the sell scenario. And if I click here on the buy, as you can see, I have take profit and stop loss marked already on a position. That's exactly what I'm explaining now. There is a question here from Ben. What are signals? I'm explaining exactly that. So the take profit and stop loss that are marked here on the chart basically allows me to capture in advance a price for the platform to remember. And when it's going to reach those levels, let me quickly mark it in here. We're going to bring that to 1. And I'm simply, you don't have to do what I do now. I'm just doing it to show you guys the levels a bit more visibly to explain stop loss and take profit. Okay, so basically you saw that I didn't touch anything in here, right? This is how the signal is built. And when I hit the buy button, it already placed the take profit and stop loss. Now, in simple words, those are pending orders, and what they do is they close the position either with a profit or either with a loss. Okay, it's going to close the position automatically with the take profit if it reaches that level, and this one it's going to close it automatically with a loss. How much loss? It's written here. How much profit? It's written here. Okay, so that can allow me to simulate with a take profit what can be the potential outcome. The potential profit or the potential loss. I cannot know if it will go higher or lower, but I can know that if it gets to that level, this will be the outcome. I hope it makes sense. And now this is something I can also modify, and I can say, listen, I want to increase a little bit my take profit to that. And then as you can see, the possible profit will increase. Same apply with the lot size. I can also modify that. If I reduce that, of course, this will have an impact on my possible profit or loss. Now, what exactly the signal is? Okay, so we saw the signal is pre-analysis on Aussie yen. Even if I'll take something else, like, oh, we are not in the section. I was showing it to you from the outside through the blue lightning icon, but I'm going to show it to you now from the section. You will see that there is not a lot of difference, but there is an advantage using the signal section. The advantage is that if I will go to the section, and I can see here to the right-hand side that this is when the signal was baked. Okay, why does this make any difference to take a signal that was just made or taking a signal from a few hours ago? let me put that question down just to begin with. We're not doing anything crazy now. We're just getting familiar with the concept. Okay, why? Let's say, is there a difference between a signal from 5 minutes ago to 5 hours ago? Okay, so what do you think, guys? Is there a difference if I'm going to take a signal from 5 minutes ago or from 5 hours ago? Is there a difference, or they're going to be efficient at the same way? So because the signals here are made, obviously the answer is no. And I'm going to show you here an example that some signals has already fulfilled the analysis that it was based on. Okay, let's take something a little farther away. Okay, those are still valid. Okay. So basically, all those things that you see blank with the take profit and stop loss, this will obviously not going to let me enjoy the signal. The reason is that the analysis that was done here is already fulfilled. And if I'll take this as an example, and I'm clicking on the view signal, it's going to tell me, Danny, the market has already reached a key level. So a signal from 5 minutes ago that is still fresh in the analysis is still open. So that means that both scenarios has a chance to get to the analysis is very different from a signal that has already reached. And as you can see here, there are fewer levels than a healthy signal. So if we take as an example the signal that we had, or Brent oil as an example, we see that Brent oil still has a valid take profit and stop loss that it can reach to. So if I'm picking this signal as an example and it doesn't have the red written in here, and I'm going to click this time on the sell, just as an example with the sell scenario, you see that I have the take profit and stop loss marked. If I would try the same with France 40, I'm not going to see that. Okay, I'm not going to see that because those levels has already reached. Okay, so you can see it from here. But if you do it from the outside, you're not going to get that column here. You're not going to get that column, and you will not know when the signal was produced. Only after, let me just show you that quickly. Only after you basically open the signal. Okay, and then it's going to show you. Then it's going to tell you when it was produced. But if you do it from the signal section, the advantage is that you can see in linear timeline when it was produced from the newest to the oldest. Okay. All right. Okay. Do we have any questions about that bit before we carry on? I don't want to delay about it too much. I still want to show you guys the economic calendar. So just on a nutshell, this is technical analysis based. It's provided to us from the Trading Central. And as I showed here, the support and resistance are in every signal that is valid. And you can also help yourself with the lines here to just customize the picture to be similar. One thing you probably want to do, because the levels in here, you see 111 for CAD Japanese yen, is a little farther away for us. Okay, what I'm showing you now, guys, is not a mandatory process. It's not okay. It's not obligatory in any way. It's just perhaps to give you an idea how to use the signals more efficiently, adding another layer of analysis. So let's suppose I would like to have some lines here at the chart similarly to what I see here. Okay, there is a question. How reliable are the signals? Can I blindly follow them, please? All right, so first of all, this is an excellent question. So thank you. All right, so Navindra, I'm going to tell you this in general. I like to have my own analysis to see the chart and understand the situation, and also understand the fundamental situation, so I can better know how to analyze the position. To follow blindly with signals, it's up to you to decide if to do it or not. I like to confirm things and understand if it's for me or not. Now, what I'm going to show you now, what I'm showing you now is exactly that. So you can see here you have resistance. We understood it's the upper lines. There are a few levels here. This is support. Those are lower lines, edge points on the chart. They already presented here. I don't have to think too much. I already have it, the number here. But unfortunately, I can see that. The reason is this is a daily time frame. So simply, every candle in here presents a day. Now, when we're looking at the chart, it seems like in our chart, every candle is 1 minute. See, M1, 1 minute, 5 minutes, 15 minutes, and I can go lower a little bit, scrolling down with a wheel on my mouse. And then I scroll down a little bit more, and then I get to days. And then I see the same picture that I see in here. And a quick tip, if you would like to squeeze the chart up and down to customize it even more, what you can do is click here on the column price and then drag up or down. Click and drag up or down lets you squeeze the chart and get a perhaps better observation of what's happening on those levels, okay? So now, when I see that the high resistance is 11 and 10, all I basically have to do is just to click and drag it to the presented price. An alternative for this, if it doesn't let you see, it's not exact. So what I can do to fix this is very simply clicking on the line twice, okay, tapping it twice quickly, and just adjusting the resistance exactly to what it's written here. And I can just randomly place the line wherever I want. And again, if I want it to be at 110.720, I'm going to click it twice, and then I'm going to go 110. Okay. And as I said, like Navindra asked, if you can go blindly with the signals, I personally like to do further analysis and then to use the signal as an additional layer. But if you want to use them blindly, go ahead and see if it's good for you or not. All right, we're not going to carry on with this exercise as it's a little bit time consuming, and I would like to also show you the economic calendar. So we're going to skip that. Okay, let's clean that chart, fold it down, and carry on down. So we have the signals. We already saw that. The upper ones, we already saw that. The news section, just a few words to understand the concept here. There are a few categories. This is also provided to us by the Trading Central, similarly to the signals. And in here, in the pre-European market brief, we see Aussie USD, Sambad, amid cooling Australian inflation. And if I scroll down, I see all kind of interesting things. Very good. And at the bottom here, I can see the related instruments. Why is that very efficient? Because if I click here, I can see that this article here actually might have an impact for also crude oil, so for also gold, Bitcoin, and of course, Aussie USD. Oh, sorry, accidentally clicked it. But the idea here is super simple. I don't want to delay about it more than that, but this is quite self-explanatory. Okay, so let's go down a little farther. In here in Discovery, we have also 5 tabs. So we have analysis views for some analysis opinions, market buzz, which I would like to show you just for a minute. And why? Because the market buzz can give you an idea what to find that is mentioned in the market and worth for you to look at. As you can see, Google is right in the middle. Seems like Google is quite popular these days with 627 mentions. What does that mean, mentions? Let's click and see. So we're clicking on Google. Giving it a minute to load. Okay, and on the right hand side, we have all kinds of articles about different topics. What if I would only want to focus on the revenue? Okay, so what I can do is I can click here on the box with revenue increase, click it. And as you can see here, revenue increase, it folded down to the mentions that I've picked. If I would like to focus on the price target as an example, I would like to unmark this. And then it's going to show me the articles with the price target set. Okay, apart from that, you can also see here some chart and analyze accordingly. You also see here the difference that it rose, how much it rose. So this is some analysis as an addition. Yeah, I don't think we need to again proceed too much on that section because it's very accessible and you can enjoy it in your own way. We have Apple here, NVIDIA. Okay, so if I go further down, we have here Forex features ideas. So in here, I can find even more ideas. In here, in the economic calendar and the trading calculator. Okay, so let's go with the calendar for now. Okay, so we saw some technical analysis. We also saw the news for the fundamental analysis, but this can help you directly find events in articles. Just a moment, guys. Hold on. Okay, so this can help you find directly events and articles about things that can have impact on the market. And this is also filtered. So it's filtered by high impact, medium impact, and low impact. We can see that this area here is a little grayish. And the reason is that it's marked on things that has already occurred. How can I know that? As you can see, don't worry, we're gonna reset everything to the default. We're gonna see everything on default. But now I'm explaining on the structure of how the economic calendar is built. So previous is the previous result, forecast is what we expect to happen, and actual is the actual result. Now, in any event that I'm going to see the actual result, what does that mean to us? It means that the event has already took place. Otherwise, we couldn't know the result. So again, last result, what we expect, and the result. Importance is what I said, is how significant we expect the impact to be for the market to be fluctuative accordingly. Okay, so we have high, medium, and low. Let's first filter, add more days. Now it's not 30, and it's showing us prior events. This we already been here. So we're going to click on the 30. We're going to then click here on the arrow. And then we're going to click here on the 6th just to expand the time length from 1 day to 1 week. And now it's going to show us from the 30s to the 6th. But that's going to show us all the currencies, right? All the countries. But we don't really need that because it's occupying the space that we need for things that we might have focused. So for instance, let's suppose that I'm mainly trading USD and I'm mainly trading the pound and also the yen. Okay, so then I don't want to see everything in here. What I want to see is I want to see yen, pound, and dollar. And now when I mark these countries, I have dollar, and I have the pound, and I have the yen, but nothing else. And if I would like to only have the news for the pound, I can unselect the Japan, and I can unselect US, and then I only see the news for the pound. Super, super comfortable. The feature that I like the most in this interface is that it allows me to add to my calendar the calendar that we have in here. And then I can specifically, instead of thinking when will be the event and then prepare myself accordingly to analysis, okay, I can just book it in my calendar. I'm using Google and Outlook, but you can use whatever you have. And then I have it booked, and I can specifically have a reminder for that, analyze what I need, and that's, I think, great. Okay, that's about the economy calendar. Oh, of course, if I would like to focus only on major events, so I can click here on the high. Okay, we don't have any major events for the pound, but as you can see, in 3 days we have the non-farming payroll. So if I mark here the dollar, all these events appears. If I select here the low, then it's going to show me only low. Okay, we are moving on. I don't want to delay about it any longer because I think we've explained quite enough. There is a question here from Azra. What is the minimum order entry per price in a live account? On the demo account, I see a minimum of 1,000. What's the minimum margin impact required to open a live? I'm not. I really want to help you. Okay, let me quickly here. Okay, so thank you so much, Azra, for the question, but we'll get to that. I'm not sure that I understood what you're asking, but I think it will be covered. So if I don't answer the question specifically, you can remind me that in 5-10 minutes. Okay, we can finally get to the second part. Let's get rid of that. And no, the rest we don't really need. Yeah, let's get rid of everything and get ourselves a nice instrument to play with. Okay. Let's actually take one of the indices and have a look at maybe NASDAQ. That can also help us demonstrate the answer for the question that we have. Okay, US Tech 100. For the people who are looking for NASDAQ, don't worry, even if I'll put here NASDAQ, it's still gonna find NASDAQ. Okay, but I was looking for something manually. See NASDAQ. All right, so, all right. So to begin with, we are looking at a bullish market here. I'm just going to do some modifications for the chart for us to see a little clearer, but this is very, very easy to do, guys, and I'm going to teach you in a minute how to also make it comfortable. Okay, so we are, like I said, looking at quite bullish market. This is the beginning of the trend is roughly the 20,000 mark, maybe 20,075 to be precise. Okay, and since the agenda here is bullish, I think that for the sake of the example here, we are going to use a buy scenario. By the way, when I'm using bullish, when I'm using the term bullish or bearish, bullish reference to a positive trend because a bull lift his opponent in the air, a bear slam his opponent to the ground, and this is why bullish means higher and bearish means lower. That's just semantics for you guys to know if you ever wondered why people say that. So like I said, this is a bullish trend. It's been climbing for the past week, we can say that, and it moved roughly $740. As I said, this is the beginning of the trend, so it climbed all the way up here. Now, let's suppose that I'm a beginner, and at the moment I have absolutely no idea what is. Let's read in the same way that it's written here, so we won't be confused for the people who are not familiar. So we have Nasdaq here. Okay, the value for one index at the moment is 20,753 in the buy and 72 in the sell. As you can see, there is a difference between the bid and the ask. It's called a spread. Okay, the spread will be charged in every position depending on the lot size. As you can see, this information is presented in here. But if I want further information for the instruments, all I have to do is just to click here on the tab, and then I can scroll down and find whatever I need. Okay, so in here we have the spread, we have the leverage, we have the margin. We're going to talk about that. And we also have the overnight fee. Okay, if I'm holding a position for more than a day, it will have some fee called a swap, and it can be found in here. Now, let's suppose that I'm a beginner and I'm not exactly sure how to approach the situation here. So maybe it will go up, but it did turn around. Now it seems bearish, as you can see. So today, Nasdaq isn't moving the same way that it moved yesterday, and it seems kind of blunt. But the day isn't over, so we cannot know what will happen. Let's suppose that we want to go with a buy. Okay, and with this buy, our intention is that the value will increase. Now, if I'm just going to randomly click here, buy, okay, and I'm thinking it will go higher, okay, is that enough indication for me to open a position? No, I'm missing a few things. The main things that I'm missing is what price I think that Nasdaq is going to go up to. Because if I think, as an example, that Nasdaq is moving maybe just $1 higher, right? Maybe even $10 higher. Okay, so I want you to see what can be the result. Let's again click here on the take profit. Just a quick reminder, take profit stops the position automatically with a profit. Stop loss stops the position automatically with a loss. Meaning that if right now I'm going to go for 20,750, which is the number presented in here, I can make roughly $10. Why is that? Because I have one index, and when I'm buying it at 20,740, if it goes $10 higher, I'm going to make $10. If, for instance, I had two indices, that would be 20. Sorry, let's also fix that. Okay, and if I would have 3, so it will be 30. Okay, again, we're gonna fix that. Okay, since Nasdaq is moving, it's not gonna allow me to demonstrate with round numbers, but you guys understand the logic here. When I'm buying or selling 1 unit of something, every dollar that it moves on the chart is equals to $1. Therefore, $10 higher will be $10. If God forbid it goes $10 lower, I'm gonna again lose $10, and this is super to understand. As an addition, if instead of 1 unit I would have only 10, I would have 10, so it will be multiplied by 10, meaning for every dollar that it's gonna move, I'm now gonna make $10. Okay, $10 profit or loss. Okay. All right, now when we have that out of the way, we understand that moving up $10 might not suffice the target that I have. So I need to know what number to expect to know A, if it's realistic or not, B, if it will grant me the profit that I'm looking to make. All right, and in this case, when I'm looking at, let's just place at least some basic analysis. Okay, now if I am thinking it will get to the 20,000, 21,000 mark, as an example, let's just flatten that out and maybe also put it like that. Okay, so if I think it will get to 21,000, as an example, I need to capture this in time frame. Meaning, right now I'm thinking of taking a buy. I have 1 unit to get to 21,000. Let's suppose this will be the target. So I can potentially make 258. Okay, now I have few question marks in here. A, is this number realistic? Okay, as you can see, if I go further back, it doesn't even matter if I'll see months. We have no prior statistics on that level. The reason is Nasdaq, and it's in his prime, and it's never been this high. So since I don't have any statistics, I don't know what to expect. What I can do is I can go with the average. What do I mean by that? Let me show you. Just a second, guys. This is a little difficult to show you guys the picture that I want, because the picture that I want to show you is with the line here at the bottom. This is why I made it this way. Remember, support and resistance. Okay, so what can we do to still estimate what will be the price that it can get to? Okay, since this is an all-time high, and okay, we understand that. Okay, so there are a few techniques we can use. For us to demonstrate, I would like to write down a few ingredients that will help us construct the position with a bit more sense. Okay, first of all, I would like to set a target. I'm not happy with 258. Actually, I would like to make 1,000. Okay, and the time length that I'm expecting to hold this position is it's not 1 day, because I think that to make 1,000 a day with $10,000 might be a little challenging. So I'm willing to wait a week. Okay, so let's say 1 week, and from that I can expect a certain movement. Now, if I'll switch to weeks, what I can simply do is I can look at the weekly candles and say, listen, this is the previous few weeks, okay, for Nasdaq, and I believe that it will, potentially it can get to 21,000, but I'm not sure if 1 week will be enough time for that to get there. So what I can do, one of the things that I can do is just look at the previous candles and say, listen, the previous week was this way. As you can see, those are the numbers of what happened last week. Okay, open stands for the opening price, close stands for the close price, high stands for the highest price achieved on this week, and low on the lowest price achieved on this week for Nasdaq. Okay, this gives every candle a different shape and a different tail, as you can see, and a different size as well, which, relying on one candle, doesn't really contribute anything, because we understand that this candle is different than this, and obviously those two candles are maybe 2 or 3 times bigger than those candles. Therefore, statistics change, and to include one candle doesn't really benefit in any way. So to actually have some analysis, I need to include the numbers of several candles. Okay, to do this, I have to jot down the numbers and start dividing all the different between the intervals. Okay, so this is very time consuming, and to teach you that with the time we have is not, we're not going to do that. Okay, so instead we're going to apply an indicator that does this for us automatically. This indicator is called average true range, and it does exactly that. What it does is it analyzes backward the amount of candles you choose. So I go here to indicators, type down AVE for average true range. Then I'm clicking and dragging it to the right. And in here I can choose how many candles the ATR is going to analyze. Now, if I want to pull an average from the previous 2 weeks, okay, it's not really beneficial, because again, 2 weeks is not a lot to grasp. Then I can choose 2. If I would like to go a little further back, let's say 2 months. So I'm going to click here on 8, and because we are on weeks, and this is 8, so this is 8 weeks. 8 weeks equals 2 months. Very, very simple. And let's also change that to something we won't be confused with the other colors. And we see that per week, Nasdaq can move on average $700. $700 on average per week. At least this is the statistics we have from going 8 weeks back from the ATR. So ATR equals $700. And I'm going to ask you guys, the difference between what we have right now to 21,000 is, let's quickly calculate that. So we have 21,000 minus 725. So that's $275. Excellent, $275. Okay, from 20,725 to 21,000. Right. Now we see that the ATR is actually 3 times, not 3 times, 2.5 times bigger than the difference that we were expecting. And I'm asking you guys, is it realistic to expect NASDAQ to get to 21,000 in a week? What do you think? Is that realistic or is far-fetched? Very realistic. All right, thank you, Max. Who else thinks that this is realistic and who thinks that this is far-fetched? Can get there easily, it's lower. Exactly, Clara. So it can get there easily, it's lower than the average. Okay. Do we have any more opinions? All right, so let's assume that we're gonna go with the average movement, and the average movement, as we see here, is 700 per week. So potentially Nasdaq can not only move to 21,000, but it can move even higher than that. Let's suppose that we're going to stick with what we said, and 21,000 is really the target that we're expecting. Now, how do we make this 258 to 1,000? Let's flatten that out just for now. Okay, and what we can quickly do, let's also reshape the take profit to something a little more round. And we are using the execute when price here to bound the price to a specific entry. Okay, currently, if I'm going to click here on buy, what will happen is Nasdaq will be bought at 21,715. Okay, if I would like to pick a specific price, let's suppose that I don't want to buy now, but I want to go a little higher than that, just for the sake of confirmation. Okay, so my buy, I want it to be 20,750. I don't want to buy it now because now it seems like it's trending down a bit, and I'm not sure if it will proceed going down or it will turn around. So I'd rather buy it when it's 20,750. Okay, and then the movement that we expect is 250. If I'll take 250 here, okay, and if I'll take 250 here, the exercise I can do here to find the necessary units is very easily. And the formula is target divided by movements equals units. Therefore, 1,000 divided by 250 is how much, guys? Is how much, guys? Who knows? 1,000 divided by 250. Can you please explain why 250? Yes, Freddie. Of course I will explain. Okay, so Freddie, the reason that I choose 250 is because we are now looking at an entry at 2,750, which is an optimized price of the current price we have now. If I'll expand the chart a little bigger, okay, let's just quickly go to this. Okay, this is where we are at right now, and I feel a little unsure to buy it now. So what I did is I pushed the entry from where we are at to a little higher. And then instead of buying it at this price, I'm planning to buy 20,750. That's the reason. It's because I'm expecting 21,000, the difference is 250. That is why 250. Now, since we spoke about it in the beginning, every indice that I take, every dollar movement equals to $1. And now, when I'm expecting $250 and I have just one unit, we're going to make $250. Now, if I'll divide the target by what I'm expecting, I can now know how many units I need. And the answer for that is 4. Okay, how can I possibly know that? Because of what I've explained. Okay, 4, let's test it out, but let's increase it gradually for you guys to understand. If I get 2 units, this will be 500. If I have 3 units, then it's 750, and 4 is 1,000, as you can see here. Okay, a flat 1,000. If I'll go for the price, vice versa. So instead of 21,000, we're going to deduct 250 from that. It will be 20,500. Okay, and then I can potentially gain or lose 1,000. Okay, this will become my take profit. This is my stop loss, as an example. Okay, and I have now a constructed position with logic, and everything seems perfect. Now, the only thing missing here is to know that I am capable of taking this position. Do I have enough money with $10,000 to acquire 4 indices? Do I have enough money, guys? One index costs 20,000. I have 10,000 in balance. Do I have enough money to acquire 4 units? Anybody knows? Anybody knows? I'm going to repeat the question again. I have 10,000 in balance, and one index costs 21. Okay, 20 is the price for one index, and I want to acquire 4. Do I have enough money with 10,000 to acquire? Okay, so we got a response from Cole saying no. Ashley, no, you don't have enough money. Thank you. Okay, so let's understand if I really don't have enough money or I do. Okay, and there is something called margin. All right, a little diplomatic answer from the audience, but let's understand the logic here. All right, so truly without leverage, I wouldn't be able to take this position. The reason is I just don't have enough money. Thanks to the platform and the concept of CFD, contract for difference, we have leverage. That means that this multiplies my buying and selling, giving me a much higher ability to acquire more units with the same balance. Meaning, if I'll take the price per unit, which is 20,715, and I multiply that by the amount of units, I will have the value. Okay, now how can I know that? Because it's written here, value. And I'm breaking down this to an equation in case you guys are using MT4 and MT5, so that you will have that for your convenience, and you can better know what to expect in terms of margin requirement. Now, the leverage, as we have explained, is actually just a multiplier. And what it allows you to do is it multiplies buying and selling, and it gives you a higher ability to acquire more units with the same balance. Meaning that instead of I would need to have 82,000 without leverage, now when I multiply it by 200, I can basically divide this by 200. Therefore, what we're going to do is simply we're going to go value divided by leverage equals margin impact. And margin impact equals necessary amount to open the position. And that's actually what I need, and not the value, and not the price either. Okay. So 20,750. Sorry, we're going to take the value 80,000, 82,000, and because it keeps moving, let me put it this way. So let's take the value we already had. Okay. And if I will divide this by the leverage, which is 200, okay, equals. Again, you really don't have to do this if you're using the web trader, because everything is presented in here very nicely and accessibly. But in case you don't, you do want to have the ability to know that. Okay, because this is the only way to know how to manage the positions in the account, and you certainly want to know how much margin you're using, because you always want to maintain the account in a proper margin level. If you don't, if you drop below the requirement, the margin requirement, what will happen is the positions will be closed. The platform will close your positions. So in order to better maintain the account margin level, it's advisable to know this calculation and to pay attention to the margin impact, to the value of the leverage in the spread. Unfortunately, our time for today, guys, is up, and we have to say goodbye. I know that at the last bit we had to rush a little bit because we have delayed on the first part, but I'm still happy that we got into this point. And even if you guys don't understand this right now, you can recap, watch the video again in your own pace as many times as you want, really. And I wish you all guys to enjoy that. All right, so it's been a pleasure giving you the webinar today. Unfortunately, tomorrow we're not going to have the live Q&A. We're going to carry on a week after. I wish you all best of luck with trading. It's been a pleasure here, and have a good day.